What's going on, everybody? Hope all is well. In today's video, we're going to be talking about supply and demand. All right, so let's get right into it. So there's two types of demand and there's two types of supply. Let's start off with the demand. The first type of demand is the rally-based rally. Okay, so what's a rally-based rally? It's the same thing as the name suggests. It has a rally, then it has a base, and then it has a rally coming off the base. Same thing here. There's a rally. This is the rally. Then there's a base, and then out of the base comes the other rally. All right. Which is the demand zone? The demand zone is basically the base. All right. It's basically the base. This is the base, which is composed of indecisive candles, and this is the base, which is a rally base. The base is composed of indecisive candles, and then we have another explosive move to the upside. Now let's talk about the second type of demand, which is the drop base rally, which is more or less like a W or a V-shaped letter. We have a drop. All right, we start off with a drop. We have a base, which is indecisive candles, and then we have out of the base, we have a rally, an explosive move, or a decisive move to the upside. All right, so that's the two types of demands. Now let's start. Let's talk about the two types of supply, which is the base, the same thing, uh, but the other direction. So we start off the drop. The first one is a drop base rally. We have a drop. We have a base, which is a bunch of indecisive candles, and then we have an explosive or decisive move to the downside out of the base. Then second and lastly, we have the rally base drop, which is more like a, let's say, an M shape. So we have this rally. Then we have the base, which is composed of indecisive candles, as I mentioned earlier. And then out of the base, we have an explosive move to the downside. All right. So that's basically the four types of supply, the two types of demand, and then the two types of supply. Now, what's the theory behind all of this? All right. Let me explain it to you. So the theory is that institutions, let's say we have these big institutions like BlackRock, Fidelity, UBS, etc. They let's say one of them want to get into a position and with $100 million. Obviously, they're not gonna put $1 million into a position. They're probably gonna be like doing like 25 million, 25 million, 25 million, 25 million. So, all right, with that said, so let's say let me erase all this. So just start from scratch. Let's say that let's say that Fidelity, BlackRock put 25 millions into the market right here, right in the origin of this move to the upside. Once they see that the price reactive reacted this way to the move, obviously they're not gonna put the remaining 75 million up here. They're not gonna buy expensive. What are they gonna do? They're gonna wait for price to come back more or less into the origin of this move, which is the the base. All right. This would be the demand zone. So they're going to be waiting for price to come back into the zone and have a reaction to the upside. All right. That's pretty much how they trade. All right. So they put 25 more million dollars here, and then they're gonna wait for it to form like a demand zone. And once price, we see that there's an explosive move to the upside, we can see that there's like demand here, and we can expect that price should come back for uh for the orders that let's say Vanguard or BlackRock or any of these institutions are pending right over here because obviously, like I said, um, they don't put all their money at once. So we can expect price to come back, fill all of these orders that are inside of this demand zone to continue to the upside. Same thing happens with the downside, right? Let's say they put $50 million on this position right here. They put $50 million. They saw a reaction of this. They saw a reaction. I mean, they saw a reaction of this supply zone. So they're going to be waiting for price to come back near this zone. All right. For what? To fulfill those pending orders that haven't been filled. All right. The reason they do this is because they want to buy more or less the same price. I mean, they want to sell more or less at the same price they sold originally. So that's pretty much how it works. All right. So now let's take a look at real examples and the charts. So let's start with the bullish ones, bullish examples. What's bullish? Bullish, for those of you guys that don't know, bullish is when it's referred when price should continue to go up, and then bearish, it's referred as to when price should continue to go down. All right. So let's start with the first it's a rally base rally. Why? Because we have this rally, then we have this base right here, and then we have another rally. If we remove this, we can see it's the exact same thing as I mentioned here. Rally base rally, look at the similarities. Now let's take a look at the drop base rally, which is basically we have an explosive move to the downside. We have indecisive candles like this one, and then we have a rally over here. Here, uh, we can actually see the candles, but yeah, you guys can see clearly we have a drop, and then we have these indecisive candles, and then we have an explosion to the upside. Now let's go and see the bearish moves, which is the first one. It's a rally. We have this rally. Then we have these undecisive candles, and then we have the explosive move to the downside. And here's pretty much the supply zone. All right. Now the last example, it's a drop. Then we have these undecisive candles right here, and then we have this explosive move to the downside. And we can see that here's our supply zone. All right, for when price comes back, it should have a reaction. Just like, look at this, look at this. Just like, just how it happened this week. So we had this old supply zone, and when it touched the supply zone, look what happened. It got a reaction to the downside. All right, so that's pretty much it. If you guys have any questions, any doubts, just leave it in the comments or shoot me a DM. Happy trading, guys. Peace.